How to get rid of FOMO. Now, I've been trading for 6 years, and the past year, I've been able to completely get rid of my FOMO, okay? And now I have talked with hundreds of traders, both ones that are successful, ones that are struggling. I've talked with therapists, I've talked with psychology coaches, and I basically reverse engineered why we get FOMO and figured out how to get rid of it. And I've been doing that for myself. And so in this video, I want to share with you guys two different things. Okay, the first one is going to be how to mentally reframe your brain so you get rid of FOMO yourself mentally. Okay, now this is going to be a process, not something you can do instantly, but I'm going to show you that. Okay, and the second thing I'm going to show you is how to get rid of it physically. All right, I'm going to show you, I wrote down three different like hacks, like literal things you can do after watching this video to get rid of it right away. Okay, so I'm going to share with you both. Now, to first understand FOMO, why we have it, and what we get it, we need to understand its root. Okay, and it comes from psychology, and so we need to rework it. And to do that, I'm just going to show you an example. Now, in this example, and with all of FOMO in general, there's three different stages that your mind will go through throughout the process. Okay, it's going to be a trigger stage, a delusional optimism stage, and then I call it the third stage is another world. All right, I'm going to explain all of this. So let me give you a quick example of what I'm talking about, and just to help clear things up. All right, so let's say, very common example as a trader, this has probably happened to you, it's happened to me a bunch of times, where let's say we're looking to get an entry here, okay, we're looking to buy, and we put a limit order out, or we're just looking to market buy when price comes down. Price is coming down. It doesn't hit, comes very close, and it starts turning and going up the other way, okay? And so, when price starts going the other way, you're like, oh my God, it was just like, 2 points from my entry. I was so close. And so when price is going the other way, you decide you get FOMO, you decide to chase in and get in up here, okay? That's a very common example of FOMO. Now, there's a few other ones like, you see other people making a bunch of money, and that causes FOMO. And I'm going to dive into that in a second. But to keep this easy, we're going to start with that first example, all right, where price comes close to your entry, this is it, and it goes the other way. So let's break it down. Now, the first stage is the trigger, right? There's always going to be something that triggers FOMO in your brain, all right, psychology-wise, like there's always going to be something. And so there's a few other, examples of triggers, but to stick to this example, right, price is coming down, it doesn't hit our entry, it comes very close, and it starts going the other way, okay? That's going to be our trigger, okay? The fact that price came close to our entry, it didn't get it, right? We were very close, but we didn't hit it, and then starts creeping up the other way. So when price starts creeping the other way, that's our trigger. That's where in our brain we start to say, okay, I am starting to activate FOMO. Like we are starting to get FOMO in our brain right now because price is now doing what? It's doing what we wanted to do, and we're not in it. We're not making money with it because we were just so close to an entry. Maybe it was just a bad fill. Maybe we just couldn't get a fill on the bid. Who knows, right? Nonetheless, that's going to be the trigger. Now, we have the trigger, okay? Now, after we get the trigger, price starts going up, we start to get a new phase called delusional optimism, okay? And delusional optimism comes when basically means we have an increased confidence that it's going to work. Okay, so same example. We're looking to get in. Price comes down. We don't get filled, starts going up the other way. Now price is all the way up here. And at this point, we tell ourselves there is no way that it's going to hit our stop loss. We're telling ourselves we get so much truth, so much confidence that price is going to go and hit our target, okay? And that leads us to the third stage, right? Now, the third stage is what I call another world, okay? And this stage basically means where we take action, okay? Where when price comes back the other way, we decide to get in here, we get filled at a bad entry, or we oversize, or a few other examples, right? So that's the three different stages. We have the trigger, we have the delusional optimism, and then we have the another world stage. Now, let me show you a few other triggers, right? One of them being, obviously, when price comes down, we don't get filled, but one that you've probably come across, I used to do this all the time, is you go on Twitter, you go on Reddit, you go on social media, doesn't matter what it is, and you see someone else talking about a stock. Okay, that's probably another common example of FOMO, right? You see, especially when GME and AMC was going on, everybody was talking about it. Everybody was posting profits and making money on it, and that probably caused you to get a bunch of FOMO, okay? So that's going to be another trigger. So think about it. You go on Twitter, you go on social media, Maybe you're not even trading at this point. Maybe you're done for the day. It doesn't even matter. But you go on social media and you see a bunch of people talking about this one stock. They're all making money on it. Everyone's banking on it, okay? That is a trigger. That starts the first, sequence in your brain, the whole process of you starting to want to make money and join them, and that's the fear of missing out. Now, that leads to the next stage. Again, delusional optimism. When you see everybody else making all this money and the price just keeps going up and up and up, and you want to get in, you have this increased confidence. Okay, you now believe since everybody's making money with it and the stock keeps going up, that's going to keep going up and more people are going to make money from it. Okay, as humans, we have a tendency to believe that when things are going, they will continue to go. And generally, that does happen. But in the stock trading world, as you know, when everybody is making money and everybody's buying, it's typically when you want to be selling. And so we started to get this increased confidence that, hey, this trade is going to work out. Now that leads into the third stage, which is another world. Now, when we get to the third stage of another world, that means we just completely get rid of all of our principles, all of our discipline, everything, right? What our usual sizing was goes out the door, right? Because we have so much confidence that this trade is going to work out. So we say, let me go in all in. Let me go in with my whole account, right? Everybody's making money. It keeps going up. Why would it go down? Everybody's telling me it's going to keep going up, right? So this causes you to oversize. This causes you to get in at a bad entry, right? If we go back to that first example, you're in a whole nother world. Your discipline is gone. Your principles are gone. Your strategy is gone. You physically cannot think strategically. You cannot think. You are acting like a completely different person when you make it to this stage, okay? And it's so key that you don't make it here because when everything goes out the window, you go all in with your account. You do it at a much worse entry than you would want to get in, and you decide not to get out of your stop. Because when price starts coming back down, you say, oh, well, there's another demand zone. Oh, there's another support level. Let me just put it lower. And it starts to just tumble and go and go and go until you end up blowing your entire account. All right? And this has happened on a multitude of different ways. Now, if we go back to the triggers, right, how do we actually solve these, right? One of them being price comes close to our entry, we don't get filled. Another one being you go on Twitter and you see everyone else making money. Maybe you're part of a community. Maybe you're in a Discord, you're in a community group, and everyone is just putting in profits, everyone's making money, and then you're not doing anything, okay? Maybe you decide not to take a trade that day, you're trying to stay disciplined, and then everyone's just banking on this one stock, and you feel left out, and you feel like that you need to make money, okay? The first way to solve this is really simple, okay? You have to just delete social media. Like it's actually simple. If you delete the trigger, if you get rid of the trigger, then the whole process doesn't start, right? If you delete social media and you are no longer looking at other people make a bunch of money, you are not going to have any more FOMO, okay? It's as simple as that, right? And I know you're saying, well, I follow other traders and I like social media and I want to see other things. I get it. So unfollow everyone else. Only follow the people that don't, give off those FOMO kind of vibes or whatever it is. And then you're good to go. Now, you may be saying, well, Jordan, that's good. That may work. But what about the issue of, prices coming down? What if I don't look at any social media? What if I am just trading and I see a stock going up and I get FOMO anyways? And it's not caused from other people, right? Or maybe it's that first example, right, where price comes down. We don't get that entry. It starts going. We think it's going to hit our target, so we get a bad entry, right? We get filled in at a late entry. So what we need to do there is dehumanize your way of thinking, right? We need to completely think in a different way. And the best way to do this is by writing down your setup. Now, I was going to go into more detail in one of the ways I'll describe later in the video of like how to physically get rid of it instantly. But mentally, you need to reprogram your way and write down what your strategy is and put it in a way so you no longer are going to dive into the realm of being a delusional optimist and going into that stage of another world where you're just completely off the grid and you are doing your own thing, okay? Now, second thing, delusional optimism. Let's say you can't get rid of your triggers, okay, because nobody's perfect. It happens. And you are now at a stage where, you're starting to realize you get FOMO. Maybe you understand that, and that causes delusional optimism, right? And in this stage, because you get so much confidence, because you're so aware that this is going to work out, this is where you decide to get a bad entry. This is where you execute to say, you know, I'm going to get a bad entry here. It doesn't matter. I believe it's going to work out. It was so close to my entry. It should work out. I'm just going to chase it. Or you start to oversize. You start to say, you know what? This is going to work out. Everyone else is making money, or it's going to go in my direction. Let me go in. Let me oversize a little bit here, right? Because I'm just so confident it's going to work. And a lot of this roots in the issue of actually not understanding your numbers, okay? And the best way to solve this is going to be knowing your statistics, okay? For example, if you know that you have a 65% win rate, then the odds of you going all in on one specific trade decreases quite a bit. So you know right then and there you have a 40% chance of blowing up your account, right? So if you're able to understand your statistics and have a real edge in the market and actually know your numbers, okay, if you know your win percentage, if you know your risk reward, right, that then and there is going to give you an immediate edge in trading, right? Because then you're going to be able to tell yourself, hey, if I know I have a 60% win rate and this trade has a 60% chance of working out, I don't want to get in a worse entry. I don't want to oversize. That makes no sense, right? It makes no sense to oversize knowing that you have like a 50, 60% entry. But because we have this insane increase of confidence that this trade is actually going to work out, we oversize like crazy. We're comfortable getting in at a worse spot than when we wanted to because we believe it's going to work, right? But if you can install in your brain and really root in yourself that you're going to have a lot of losing trades, that is going to help combat that, okay? And the third thing, another world, this last stage, there's really no way to get rid of this, okay? What you need to do is get rid of the triggers, and that's going to stop the entire process. If you can kind of cut yourself off at the delusional optimism stage simply by having, you know, an edge and understanding your statistics, this is kind of at the point where, you know, you're understanding that you have FOMO, but you're able to stop yourself before you actually execute, okay? That's really key. But once you execute, it's kind of over, right? There's not much you can do. So when you can get through all three of the stages and when you can really understand them, that's how I was able to get rid of my trading, right? So by getting off of social media, right? By not, you know, letting other people dictate when I get in and out of a trade. By like physically deleting social media, right? As you guys know me, I'm on Twitter a lot. That's like my main platform. For a long time, I had Twitter deleted. I didn't even look at it, okay? And that helped a ton when it came to me actually making lots of money and being successful with trading, getting rid of FOMO, right? And then also delusional optimism, right? When I really backtested my strategy and I knew what my win rate was, right? I knew it wasn't 70, 80, 90%, right? And so I knew it doesn't even matter how many other people are getting the trade. It doesn't even matter how good, how A+ of a setup it looks. It's still not going to be a 70, 80, 90% win rate. And that's fine, right? I don't need that to be successful. But by understanding that and really implying that in my head and going through the work of journaling and understanding and backtesting and seeing what my strategy is, that allowed me to say, you know what? I'm not going to oversize on any more trades. I'm done. It's stupid. It makes no sense. And that got me out of that delusional optimism stage. So by rewiring my brain, by understanding these stages, and by really being able to get rid of that first thing, the trigger, that is going to allow you to just be so much free in terms of relax with your trading, right? You're not going to get FOMO. That's going to mentally prepare you to get rid of it. And it's one of the best things you can do for your trading. Now, I wrote down a list here of a few other things, okay? I have 3 things I want to share with you that are like physical, literal things you can do right after watching this video to help you get rid of FOMO, right? Now, like I said in the first 2 things, you should be A, deleting social media, B, like figuring out what your triggers are, taking care of them, and then also setting up a system in place for, let's say a trigger does happen, stopping you from executing on it in that delusional optimism stage before it actually, before you execute, right? So you can do that by journaling, knowing your numbers, having an edge. That is going to be a few things. Now, this kind of dives into the first one I was talking about, right? So the first way that you can instantly get rid of FOMO, as I said, is actually having a proven strategy and knowing it, understanding it, okay? Let me just show you a quick example and dive into here, right? Let's say I use the casino analogy a lot, okay? Let's say you're a casino owner. Somebody walks in, okay, and they win the jackpot. They win $1 million, right? Are you, as a casino owner, going to be sitting there stressing your hair, like pulling your hair out, stressing, freaking out, like, oh my God, what am I going to do? No, right? Because you know, as a casino owner, over the long run, you have an edge, and you're going to make that money back, maybe in the next week, maybe the next day, or maybe the next month. Doesn't matter. But you have a natural edge. You know your numbers. You know that you are going to make money in the long run, so it does not affect you, okay? Nothing affects you. It doesn't matter if 20 people walk in and they all start to get jackpots. None of that matters, okay? Because you know in the long run that you have an edge and you will make money from it. Now, that's the first thing. Same thing with trading. You need to be able to have an edge in your trading and understand, if I take a loss today, if I miss this setup today and somebody else takes it and they make money from it and I don't, that does not matter, because you know you're going to make money in the long run. See, a lot of traders don't know this. A lot of traders have lack of confidence. They don't think that they're going to be a successful trader, and they probably won't, because they haven't done the work of actually identifying a strategy that is proven to work, right? They don't know their numbers. They don't know their risk reward. They don't know their win percentage. So they're kind of taking it trade by trade and just hoping that they're going to start seeing their account grow. But the reality is that is never going to happen. So what you need to do in the first step is having a proven strategy and writing it down. Now, this is so key. Okay, you need to actually write it down physically. You can put it on a Post-it note, put it on your computer, do what you got to do. But write it down physically so you know step by step what your strategy is. Step 1, step 2, step 3. This is what I need to get in. This is what I need to put my stop when I do get in. This is where I put my target when I do get in. This is how much size to use in every trade, okay? When you write this stuff down and you put it on a piece of paper out of your brain so you can physically see it, it makes a massive, massive difference, okay? Especially when you know that it works. If you were just running with a strategy because somebody else told you it works, and you haven't done the work yourself, or it's not back tested, or you're kind of just taking from someone else, taking from here and here, taking alerts, it's going to cause so many emotions, so many games. And if you're looking to become a full-time trader and make this thing work in the long haul, you need to do this. You simply need to do it, or it is never going to work. It's never going to work. So that's the first trick. Okay, not really a trick. Okay, it's a lot of work, but that's what you need to be successful. Now, second trick, all right? This is like an actual hack. This is something I did that worked a lot. I still do it to this day, and it's incredible, all right? Now, quick story. When I was trading, I was always going back and forth between day trading and swing trading. All right, I tried both for a while, and I still do both now. But what I realized was there was a point in time when I focused entirely just on day trading. I was like, I'm going to be a day trader, just going to stick to this, and I'm going to be very disciplined with my setups, my trades. And I was only focusing on one ticker, right? I was focusing on SPY at the time. And so what happened was there'd be multiple days in a row, 1 or 2 days, where I wouldn't take any trades, okay? And this caused so much FOMO, all right? And the reason for that is a lot of us are addicted to trading. We don't even know it, right? We have this desire to take a trade. We want to make money. We want to take ourselves out of our current position, right? Whether it's we're stuck at a job we don't like, whether it's there's a medical bill we want to pay off, we're in debt, doesn't even matter, right? We're in a position, we want to take ourselves out, so we get FOMO, and we start to force trades that aren't even there, right? And this comes from day trading. Now, what I did to combat this was the real solution is you want to get rid of your trading addiction. But what I did is I kind of just supplemented it with swing trading. So I opened up a swing trading account, and I started doing both at the same time. I was doing both day trading and swing trading at the same time. And the reason why this helped so much was because what I would do is I'd day trade. That was my main focus. And I'd figure, okay, if there are no setups today, I'm just going to look at all my other stocks and look and see if there's any swing trading setups. A lot of times there would be, because in swing trading, I'm looking at the whole different market. And so what that did was it basically allowed my addiction of trading to keep going without forcing any trades in my day trading account. It allowed me to monitor my swing trading. My swing trading was very low size. I was still only taking a few trades, but having another vehicle to make me money that isn't just day trading allowed me to take my focus off of it, which means I wasn't going to be forcing trades. I wasn't going to be getting FOMO, and I really wouldn't even care if I made money or not. right? Because I could just always go to my swing trading mindset, like switch over to swing trading and just be like, okay, yeah, let me go ahead and trade this setup. Let me go ahead and look here at this stock, and let me monitor this one. Let me do this. And it was a lot less FOMO, it was a lot less attentive, and allowed me to take my focus off of day trading, right? So actually doing both was a huge plus. So if you're day trading, if you're swing trading, open up an account for the other one. Try doing both at the same time. But what it does is actually takes your focus off one of them and puts it on both. And it's better because now you're not going to be forcing trades. Because when you're focused too much on one thing, when you start to overtrade, you start to, over analyze everything. You make it way too complex than it needs to be. And if you have two different opportunity vehicles, if you start making money from swing trading, you're not even going to care if there's a setup in day trading or not, right? I wouldn't care if there's a setup on SPY. I would be like, A plus setup, it's not there. I don't care. I'm just going to go focus on my swing trade and see if there's anything there. It allows you to have this back and forth where you're no longer, forcing any trades. Okay, so that's the second, hack thing that I would do, and I still do it to this day. I have both day trading and swing trading, and I mainly focus on day trading. But if I ever feel that FOMO come to mind, if I ever feel like, I just have that urge to get into a trade, I'll just switch over to swing trading and use that to analyze other stocks, see if there's any good setups, take the edge off there. All right. Now, the third thing you can do to instantly get rid of FOMO is this. FOMO is just all about discipline, right? If you can stick to your setups, stick with your entries, right? If you're not chasing entries when they're all the way up here, you can get rid of FOMO. And to do that, you need to set up a reward system, right? And so it's really simple. You need to write down a list of rules, okay? So maybe you're not taking more than one trade a day. Maybe it's 2 trades a day. Maybe after you take 2 losses, you're done trading, right? Maybe you have a rule where if you oversize one day, you don't trade the next day, right? If you break your rules, you don't trade the next day. And so what you want to do is create a reward system where every day when you finish the trading day and you follow your rules, you have a reward, right? It could be something as, you get an extra cookie at night, or you get to go, I don't know, just play a board game, do whatever, like something that you enjoy doing, that is going to do that for you. The other thing is going to be a punishment, all right? And so when you don't follow your rules, you need to punish yourself. And this thing just keeps going with discipline, right? Because if you can set yourself up to have discipline outside of your trading, right? Like, you could set yourself up, hey, if I don't follow my rules, I have to go in the cold plunge for 3 minutes, right? Or I need to do an extra hour of cardio, right? Something that's healthy that you can punish yourself with. So it's kind of like a win-win. And so that way, when it comes to your trading, you'll get discipline outside in your life. So you'll be better with, the cold plunges. You'll be better with, your diet or whatever it is. And then that will automatically translate into your trading. When you have a lot of discipline in your trading, that is going to translate into making a lot more money and not having FOMO, right? Because if you can get rid of those triggers, you can have the discipline to stay away from those triggers. And then you go a step down, you have the discipline to not actually execute when you understand that you do have FOMO. That is going to allow you to completely get rid of FOMO and be able to trade a lot more successfully. Okay, so I hope you guys did enjoy this video. I know it was a long rant. If you stuck until the end, you're literally a real one. Okay, I have a few links in the description of some free courses, a free community, online training. It's a bunch of whole crap for you that's going to help you out become a better trader. Go ahead and check that out, and I'll see you guys in the next video.